Okay, so Title 101, the basics. So I'm here today with Laura Hoker of Envision Title. They do a great job. They've got several locations that I'll let her tell you about here in a second, but she is an expert. She is a closer. So she knows title, definitely better than me. So I thought it would be great to have her as a guest today. Just really quick about me, for those of you who don't know me, I've been in the business for almost 27 years, and I've closed over 4,300 loans, all by referral. So I'm super passionate and still get super excited about helping people just get into their home. Actually, my favorite is still first-time home buyers. They're super fun. And I'm here to help you on any of your questions. Those of you that are joining us today and aren't on my email list, I'll put you on my, I have a weekly interest rate update email that I send realtors. So I'll put you on that if you're not already on it. Just a quick, I want to point you to my YouTube channel. So I have a library, y'all. Actually, I have two YouTube channels, but the main one is the one on the top. It's a library of currently over 300 videos, all about home buying. So I'm encouraging realtors and their clients to go there. You could type in a keyword on my site, and I know I have a video about it. And I'm always thinking of new topics. I just had a couple topics that came to me this morning. I release 2 videos a week, and then this webinar will be uploaded to that too. So I'll then, start pushing that out. So I'm always posting content. So my goal is that you and your borrowers have lots of content so that you can get real facts, and don't, save hours on Google is my goal, to get them real information. And then I have another one called Loan with Jen Biz Tips, and it's stuff like little stuff to get you on more business. Like, it's more non-borrower stuff. So you could definitely like that as well. And I've got tips on gifting and how I video and accountability and time management tips, all that kind of stuff. So Loan with Jen and Loan with Jen Biz Tips, check it out. All right. Oh, there she is, Laura, on the slide. So Laura, she's been in the industry since 2020. Yeah, you worked your way up as from receptionist. That's the way to do it right there. Like hard knocks from the beginning, 2011. And she's been with Envision Title for a couple of years. So Laura, I'll let you just tell us a little bit more about you, and then we'll go right into it. And I'll manage the slides over here.
Great. Thanks so much, Jen. Again, my name is Laura Hoker. I'm an Escrow Officer with Envision Title. I have been in the title industry for about 11 years now. I did start at the front desk, as Jen said, and I do think that that is the best way to start at a company, just because you kind of work your way through every position. You really learn the ins and outs of the industry, and I think it's really benefited me to be an escrow officer. So I think this is my very favorite position. Actually, I love meeting different people. I love helping people get into their new homes. And so I think that's enough about me, and we'll go on to the next slide. All right. So what is title insurance? I feel like a lot of agents, know that you have to close at a title company, but not why. Why is it necessary? So title insurance protects the policyholder from any prior liens, claims, or encumbrances against the property prior to the date of purchase. So it's basically title's responsibility to thoroughly search and examine the property to clear any issues. Now, the 2 main types of title insurance are going to be lender's title insurance, which is also known as the mortgage title policy. The second most common type is going to be your owner's title insurance, which protects the buyer. Okay. So the lender's title policy protects the lender's interests. It insures the mortgage principal, and it covers the life of the loan. Now, the owner's title policy protects the homeowner's interest. It insures against losses due to any title issues, and it covers through the duration of ownership. So now what does it cover? It covers any title search mistakes, errors in public records, so anything recorded of record, any forged documents. Maybe there's undisclosed or missing errors, any liens for unpaid taxes, any claims arising from unprobated wills. And so the policy basically covers any legal fees to defend against such claims. Now, on to the title commitment. So the title commitment is the preliminary document issued by the title company, which lists the requirements and conditions under which a title policy may be insured. So basically, this is title's instruction on how we need to close the transaction in order for the underwriter to insure the property. So title commitments are made up of 4 schedules, and we'll go on to Schedule A.
Hey, Laura, I think maybe at each slide, it might be a good idea to do, because I have some questions that I think people might be asking. Like if people can chat, I wanted to spur some questions about the title insurance, especially on the kind of questions that I get. So like first of all, when they're paying cash, they just need
an owner's title policy,
right?
Mm-hmm. Yes, ma'am.
And the title policy is, I think it's important to talk about the State Board of Insurance. Can you tell a little bit about that, where it's like no matter what title company you use, like there's no discounts on title insurance. It doesn't matter. The title company has no control. So can you talk about that?
Absolutely. So title companies are regulated by the Texas Department of Insurance. So title insurance is promulgated. It all depends on how much the sales price is and how much the loan amount is. So there's no discounts or anything across the board at all title companies. The title insurance premiums will be the same.
Gotcha. And so what if a cash buyer is like, why do I need title insurance at all? Like, I want to save money. They're not required to get a policy, right?
Right.
Talk about that.
Absolutely. So owner's title insurance is definitely optional. A good example here, I guess, would be actually have a transaction. The person, purchases property at a tax lien sale. So there's no title search done. They just cash purchase this from a tax lien sale. Now that they're ready to sell the property, it's becoming an issue because title search was not done when they purchased it in cash. There's now all of these liens in title, recorded of record that need to be taken care of. There's actually heirs that need to be divested. So I always suggest purchasing an owner's title policy at the very least, because it does protect the policyholder from any, heirs that, come up now, and any unpaid taxes, any unpaid, child support liens, any abstract of judgments that'll need to be taken care of.
Got you. And then when there's a lender, definitely I can tell you there's no lender that will close without both an owner's and a lender's title policy. So it's mandatory, even though on the closing disclosure, there's a little word there that says optional, but it's not optional. It's optional who pays for it. I'm wondering, do you know why it says optional on there, Laura? Do you ever get that question? Like,
I do. And I always explain it to clients as it's optional because the buyer can opt out. Now, I never suggest that, and it might not be approved by the lender on the flip side, but whenever a person is getting an owner's title policy and a mortgage title policy at the same time, they get a simultaneous discount. So what that is basically if they're getting both policies at the same time, the mortgage title policy is reduced to only $100, and that is standard in Texas. Let's say that the buyer opted out of an owner's title policy. Then the mortgage title policy is not discounted and they have to pay the full premium, which is just as much as the owner's title policy by itself.
So I do actually have a question about that. So we do have a question in the chat and they are asking, is the premium a percent of the price?
No, so there's actually a calculation. I'm going to send that to Jen after we're done, but there's a premium sheet that we have and it actually lists like general sales prices, 125, 130, 135. And then there's a calculation that goes with it. So I'll go ahead and send that to Jen whenever we're done, and then she can disperse it to everyone.
Yeah, when I email everyone this recording, then I'll include it. I'll do a Google link to that, what you're going to send
Perfect.
me. So the recording. Okay, great. Well, that was a great question. So it's just important to know when buyers and sellers, I think the talking vocabulary is that title insurance is promulgated and mandatory by the state of Texas. It's overseen by the State Board of Insurance. The title premiums are the same for everybody. So, and there's no discounts. Like there's no, like title company to title company, it doesn't matter. It's going to be the same. So you guys are very heavily regulated, even on your other fees. I mean, you just can't,
Exactly.
There's a little bit of a variance, but the cool thing is really service does really matter. We'll talk about that a little later, but that's really what sets title companies apart, is the service that you guys provide and just being super on top of it, which you guys always have been. So if there's no more questions about title insurance, actually what it is, we'll go to those 4 schedules. So cool. Thanks for answering that, Laura.
Absolutely. Okay, so Schedule A, you consider this the actual facts of the transaction. It's going to have the effective date of the commitment. Now, the effective date is not going to be the date that title pulled the recordings. Okay, so all title companies basically subscribe to a database or a plant, and that plant pulls all of the recordings from all of the counties, but they can only pull up to a certain date. So let's say I were to open title on a transaction today, the effective date will probably be a week ago. Okay, so the effective date is just the most recent recordings that we were able to pull. Next is going to be the name of the proposed insured. So that's going to be the buyer or the borrower. And this should reflect their legal name. So anything that they're going to use for identifying purposes, this has to match their ID. And it has to be, a valid government issued photo ID. And then also proposed insured is going to be the lender for the mortgage title policy. It's going to have the proposed amount of coverage, which will be the sales price and the loan amount, because again, the title premiums are based on those amounts. Schedule A will also include your current record owner of the property. So that is going to be the most recent recorded warranty deed. I guess I can touch on quitclaim deeds here. So quitclaim deeds are not recognized for title insurance purposes. Okay, so if there's a
quitclaim, can you say what a quitclaim deed is?
So let's say I want to just sell the property to my sister, and we don't want to go through a title company. We don't want to go through, she's not getting a loan, and I'm just literally changing title from me to her. We can do a quitclaim deed. And so in that way, she can do, the property taxes with the appraisal district and all of that good stuff. But when she were to sell the property, the quitclaim deed is not recognized for title insurance purposes. So I would actually have to sign a warranty deed, get that recorded, and then title will actually be in her name. Does that make sense?
Yeah, so I have a question. So let's say that you have title that's opened and someone is selling their property and someone did a quit claim deed. Is it just mean that you've got more things that you've got to file, or is it impossible for them to sell that property, or like?
So if we would need to find that prior owner and have them execute a warranty deed rather than a quit claim deed. And then let's say that prior owner is now deceased. So then that goes into, that goes into finding their heirs and having their heirs execute a warranty deed to the person on the quit claim deed.
Okay, got it. Okay, that's really interesting. I just learned something new. I'm taking notes over here so I can on social media. That's awesome. Anybody have questions about Schedule A, or this is a great time to talk about ownership really quick. Like, actually, I'm having questions as I'm sitting here, Laura. So something that we see, not commonly, but we see is that the listing agent will put the name of someone different on the contract than what's on the owner of record. And for us, that causes a major issue, and I'm sure for you too. So like, how can listing agents be sure that they're putting the right person on the contract? Like, this must mean like when there's maybe either an estate or I guess thing, like what can they do?
That's a really good question. I think I would just suggest that they look at the appraisal district's website, because the appraisal district also pulls the recorded deeds of record, and they do update their records that way. Now, let's say there is an estate. So that is when title starts to ask the questions, who's going to be the executor. We do need documents authorizing who is going to sign on behalf of the estate, and that's when it is really beneficial for all of the agents to really work with their clients and title in getting us what we need early on, so that it's not, a week before the close date and we're still trying to figure out who can sign on behalf of the estate or an LLC or any other kind of entity.
Yeah, that's a good point, because I see the repercussions of when title is opened incorrectly, and then, our appraiser does the appraiser and the contract seller doesn't match the appraisal records. Like you said, it creates just this huge storm of questions, delays, and it will delay the closing for sure. So
absolutely.
I guess what listing agents could do is make sure before they list a property, if they know that title has changed hands and they know that the seller's name is different than is on the appraisal records, that should be a red flag that they need to get with a title company as soon as possible and open up title, right? Is that what could happen?
Exactly. And so let's say the seller, the seller of record is deceased. So basically the property is being sold by an estate or, their heirs, children, or what have you. And that is why it's, when we're opening up title, we are comparing the seller on the contract and the legal description on the contract to our commitment. That's why it's really important for those two things to be correct, because if the legal description is incorrect on the contract, then yes, we're going to examine an incorrect property. And then, of course, it all trickles down from there. Let's say we have to order a survey. The survey company is going to survey the wrong property. So it's always really important to do your due diligence.
Okay. So I think in summary, and then we have two questions, is to make sure that when you see a discrepancy as a listing agent, if you see a discrepancy between the appraisal district and or tax records and the seller, as they're telling you their name is, you need to be like, I need to get some help here. Okay. Got it. Got it. Okay. So first question, talking about warranty deeds. What is the purpose of a warranty deed and what does it warrant?
So a warranty deed is basically what gets recorded with the county clerk, and it transfers title from one owner to the new owner. So a general warranty deed, I think there's two main ones that we use is a general warranty deed and a special warranty deed. A general warranty deed is probably the most common, and it protects the new owner or even the seller. Actually, it protects the seller for the history of the property, the entire history. A special warranty deed is very common with builders because it protects the seller, and the seller is only responsible for it as long as they've owned the property rather than the entire history of the property. Does that make sense?
Gotcha. Gotcha. Yes. So it's a conveyance of title from seller to buyer, basically.
Yes, ma'am.
Whether there's a loan or not.
Correct.
Okay, cool. And then the second question is, so on the contract for the estate, do you list the seller as the executor or do you list it as the estate of whom? The estate of, Joe Smith?
The estate of Joe Smith would be fine.
The estate of Joe Smith. Okay. Gotcha. Good questions. All right. Well, that was Schedule A. So I'm going to move on to Schedule B. And we'll talk about that.
All right. So Schedule B is going to contain the buyer notifications and exceptions. This is a really important schedule, and I feel like a lot of people don't pay attention to it if it's just a, owner to owner. But let's say there's an investor on the property. They really want to pay attention to any restrictions that are recorded of record, because this can affect the use and access of the property. Restrictions could be, you can't open a daycare in this property, or you can't open a bar, or you can't rent it out. I mean, that would be huge. And then of course, access of the property. That's if, what if there's a bunch of land and they just purchased this little lot, but there's no street access. So the only way to access the property is to enter into other people's property, which a lot of people don't like that. So the schedule is really important because it can affect the use and access of the property. It lists out the taxes on the property. So if there's, a mud tax or other property taxes, county taxes, it'll contain any easements on the property. So of course you're going to have like your center point easement, which is very standard for subdivisions. Any mineral reservations or leases. So if there's any, a lot of sellers sell their mineral rights, but let's say it's a bunch of land, there's oil on the property, the seller can reserve their mineral rights. And then, of course, area and survey discrepancies. I feel like I get a lot of questions on that because it's also on the contract. I'm going to explain that a little more. So basically, examples of area and survey discrepancies include if an adjoining landowner with improvements that encroach on the property or vice versa, that's going to be a survey discrepancy. If a surveyor has any errors in locating improvements or boundary lines, that's going to be another discrepancy. If fence lines don't follow the boundary lines of the property, the A and B deletion or survey exception, which is, I think, on page 2 of the contract. Y'all correct me if I'm mistaken. I don't have a contract right in front of me, but that is what that covers. And of course, that's a negotiable item. It can be paid for by the buyer or the seller or both. And then, of course, the last thing on Schedule B is going to be the rights of others. That's like investment properties if you have a renter or, squatters or something.
So basically, I mean, I know I know when I see a Schedule B, I get kind of glazed over because some of the, sometimes there's just miscellaneous mumbo jumbo in there that's just kind of normal. But like, is it usually 1 or 2 pages long, or like how big is Schedule B?
It really depends. If it's a typical lot and block, just a regular house, it'll be about 2 pages long. Now, once you start getting into land and that has a lot of mineral reservations or mineral leases, that's when it can get pretty lengthy.
So this is anything that's been recorded as an easement. When you say taxes, is this where past due property taxes are? Is that what that means? Or is that Schedule C?
So any past due taxes are going to be on Schedule C. Schedule B is just a notification that there are property taxes, or that there are HOA, that there's an HOA on the property or anything like that.
Okay. So it is important to kind of go through and highlight anything that might stand out. So agents should read Schedule B is what I think you're saying.
Absolutely. And actually, I have another instance right now on a transaction where it's a family to family. So the daughter is purchasing from her parents. And that's fine. We just have basically a family to family affidavit executed at closing. However, the parents have a lease back right now. It's a 60-day lease back, and our underwriter is requiring extra exceptions onto Schedule B because the parents are not moving out right away.
Got you.
And that's only because it's family to family. So this would not pertain to, strangers selling to another buyer and they have a lease back or something.
So all these kind of things are in Schedule B. Well, I guess you don't know it's family to family unless either someone tells you or they tell you or they have the same last name. I guess you'd have to find that out, right?
Yes, ma'am.
Okay. Interesting. Okay. Well, any questions about Schedule B in the chat? I think we're good. All right. Schedule C. This is a really big one.
Yeah. Yeah. So Schedule C, I always say that this is where title lives. This is what we need to clear to close in order to close the transaction and our underwriter insure the property. So Schedule C is going to contain liens. So that's going to be any current mortgages on the property, any abstract of judgments against a seller, any, that could be tax liens, that could be child support liens. And then it also will go over any bankruptcies on the seller, the marital status of a seller. So Texas is a community property state. So that is why we ask about marital status from the purchase date of the property to current. So let's say they were single when they purchased a property. They have since been married. That spouse will have to join in the transaction. And then, of course, it'll contain any probate issues and entity trust issues. So if a buyer or seller is an LLC or any other kind of entity, we will need those corporate docs to review to make sure that we are having the correct party sign on behalf of that entity. And then if it's a trust, we need trust docs to review as well.
So I have a question about marital status. So we see quite a bit people that come here and they're from another country and they're married in the other country, but that spouse has never come to the US. Like they've never even stepped foot here, and the spouse lives and is always resided. So when someone comes here and crosses the border and they're not legally married in our, USA, how do you view something like that?
So in that case, I think it's always safe to just have the spouse execute a non-homestead affidavit, and then we will record that of record.
Yeah, because then that becomes complicated because like they live in the other country. We got to track them down. What if that spouse is not available or they can't be found or something?
Oof, that's when it kind of gets complicated. We do use Notarize, which is a third party e-notary application that has been very convenient for anyone who's out of state or out of country. Now, I think what Jen in this instance is that I'm guessing the spouse is not a U.S. citizen and probably doesn't have any U.S. credit history. So I think that would be on a case-by-case basis in which we would have to ask for our underwriters counsel on that, because they may have to look at the transaction and just make a judgment on their end.
Well, I think it's important for agents to know that not only for the lender, but also the title company, whether they're getting a loan or not, it's important if you have questions as you're talking to clients about their marital status one way or the other, if you know they have a spouse in another country, get with Laura, get with the title company as soon as possible to start asking those questions, because it will come up to bite us later on for sure.
Absolutely.
And the liens part too, I'm going to mention. So we have started to see an increase in liens and things on title, like, payoffs for sellers where they were in forbearance and they didn't really, either they didn't realize or they didn't know how much is added to their payoff for all those months of not paying. And so we're seeing increased payoffs. So then sellers realize, I'm going to be upside down. I can't sell my property. Are you seeing increased numbers of things like that?
Yes, absolutely. Especially due to COVID, a lot of people utilize the forbearance, and a lot of people really don't realize that you have to pay that back. And if you can't pay for it back when the forbearance is done, it does get tacked on with penalties. And some lenders will have HUD pay that difference. And so a lot of sellers don't realize that they have a lien payable to HUD when they go to sell their property. So I have noticed a lot of that lately. Sellers just very confused. I only pay one mortgage payment, but there's two liens recorded. And so, I've definitely seen an uptick in increased payoffs.
Yeah. So I would say, as a realtor, if you're representing a seller, really have that talk with your clients. Because in many situations that we've had this, the listing agents were blindsided, like they had no clue. So I don't know what that conversation looks like with a seller, but it has to happen, because if they've been in forbearance ever, or if they had an escrow shortage, like all those things come to light and it affects the payoff. So we're going to cover at the very end some things that we see as cautionary. And I'm going to kind of go over that again, but while we're on this section, I wanted to mention it. Are there any questions about Schedule C or any of these issues on here? Okay, cool. Schedule D.
All right. Schedule D is just a quick, short, little disclosure. It will have the owners, directors, and officers of the title agency. It'll have the underwriter that is insuring that specific transaction. And then, of course, it will list the title policy amounts. All of these are required by the Texas Department of Insurance to be disclosed.
So I have a question kind of in summary back about what is a title commitment. So can you give an example so someone can really envision when title policy would come into effect? Like when these claims happen, what is that? What are some common things that come up that homeowners are like, hey, there's an issue and title has to come in and...
Okay, so a couple of examples would be rollback taxes. If rollback taxes weren't caught before closing, then the current owner can issue a claim on their policy to have that covered. So rollback taxes, any liens that were missed. A lot of underwriters will require title to do a bring to date. It's called a bring to date. That is whenever we are researching the property again for any new recordings. And so a lot of underwriters require title companies to do a bring to date within 3 days or less of the closing, so that we're sure that we're capturing the most recent recordings. Now, I've seen where a lien gets recorded the day before closing, and so it's not caught. And then later on, that lien pops up, and let's say it's $100,000. And it just wasn't caught because it was recorded the day before closing. And you guys got to remember that our capture window is about a week out. And so that's when a title policy comes in really handy.
Oh, wow. So I guess, so that's why you guys do kind of a scramble for a last minute check, I guess.
Exactly.
Wow. Okay.
So if there's anything new that pops up on our title commitment, once we do a bring to date, it will delay closing unless we can get a payoff or whatever we need in time.
Mm-hmm. Interesting. That's kind of like what lenders do. We do a last minute credit check, make sure they haven't gone out and done anything,
Bought a car.
That's interesting. So how do people, let's say, after closing, the clients rely on realtors a lot, as they should. We want them to call the realtors again to, be their advocate, right? So let's say they're like, oh my God, something, and they feel they might suspect they might need to have a title claim. So how do they file a title claim?
So let's see, I think it's 90 days post-closing, but within 90 days, the buyer should receive their final title policy along with the recorded warranty deed. On the title policy, it will include the underwriter's information, and it will also include where written claims need to be sent to. So it'll have a phone number that you can call with questions, or it'll have that mail-in address for the claim. So
when people get that original title policy, that would be something they should put in like a vault, right? Like you have
absolutely in a safe place. Or they can always reach back out to the title company. We have to keep record of those. So they can always reach back out to us, and we're more than happy to help.
Okay, awesome. Yeah, good. Thanks for that segue. Any questions before we move on we're almost to the end here. Okay, so I made some quick bullet points about how lenders interact with title. So, think of the title company as a disinterested third party, they're the nucleus of keeping everybody straight. They're handling monies from the buyer and the seller and the lender, and they're like the hub, okay, of everything. And they're, of course, providing the title insurance, but they also, manage in escrow, keeping money, I would say safe is how I would use it, until it needs to be dispersed. So they disperse the bills. They'll, pay the seller. They pay, they handle the money going to the realtors or whatever state you're in, attorneys, whatever it is. So the way we interact with them is that the purchase contract is received. We get it from the realtors, and then our processors connect with the title company. And then the title company does what she mentioned in the beginning. There's this process of they open title, they're searching, right, for liens and filings. And, to make the title commitment, I'm only imagining it's no small task to put all that together and make sure that there's no errors, right? So that takes what, like 4 or 5 days currently for a title commitment?
So it depends on the county. All title companies, have to use a plant, as I mentioned earlier, and you have to basically subscribe to counties. So for a subscribed county, we call that in county, and we can have that commitment back within a day. Now, if it's an out of county, a county that we're not subscribed to, that is when it can take weeks. I have seen turnaround times of 21 business days, to, 45 business days. It's really excessive.
So that's in some of the smaller or the counties that are like more rural and stuff. Like you said, lots of mineral rights and stuff like that.
Yep.
Yeah, if you are doing a listing or a buy, I'll just mention in something that's like outside of the city limits, that's in a more rural area, there's no 30-day closings. Like I see these 30-day contracts, I'm like, y'all, appraisals probably take 6 weeks. Surveys take 6 to 7 weeks. Like everything is extended. And so it's really important to talk to that local title company, to really figure out, what the turn times are. It's really interesting to do something out in what I call the boonies, but it has to be done. It's just different. And there's not as many people working out there either because there's less people.
Right.
So very different from the city. So we receive the title commitment, usually after several days. We work together with title. Usually there's back and forth between our processing about things on the Schedule C. I mean, you guys alert like, hey, these things have to be cured. And then 5 to 7 days before closing, we're sending our numbers to the closing for the title company to prepare the closing disclosure. There is a lot of back and forth in that. We send numbers, they send us a draft. We're like, no, it's got to go on a different line or this. I mean, there's, it probably takes, what would you say, Laura, like a couple of days for the back and forth to balance?
Yeah. On a good day, it'll take, a few hours. And then of course, if there's, if a lender has to disclose things a certain way and, title trying to figure out how we can make the lender happy and balance at the same time, just in our title software system.
Yeah. And then on closing day, the lenders wire the money the day of closing. So we do not like to wire it the day before because the money is then sitting there overnight and we're accruing, we're paying interest on money that's, so almost every lender, I don't know of many lenders that wire the day before. Do you? I mean, are you getting them the day of?
Yeah, it's typically day of.
Yeah, so wires usually go out in the morning. So if you have an early morning closing, you need to know that wire is probably not going to hit till midday. So it's great that everyone signs and gets it out of the way and all that good stuff. But, the wire is not going to be received. Most companies, including ours, I mean, we send wires out at like 8:30. And depending on how everything has to pass through the Federal Reserve in this cyberspace, but kind of like the Apple iCloud, like it's there, but you don't really know what it is.
Yeah.
And then the money,
that's a good way to put it.
I mean, you have a lot of wires, I'm assuming, show up kind of midday, right? Like that's kind of the activity that happens.
Absolutely. Or, even if buyers send their wire the night before, then we're getting a lot of wires in the morning. But a lot of people think that it's an instant, transaction, and it's not. Like Jen was saying, the funds have to go through the Federal Reserve and then they have to be accepted by the, the incoming bank.
Yeah. So that's all happening on closing day. So what we tell buyers is, and the listing agents, is that currently it probably takes 2 hours to fund, because you have to think, I mean, the title company can't they have to scan everything to us to prove that both buyer and seller have signed. So if buyer and seller are signing at different times, If one is remote, you've got to wait for that mobile notary to confirm, everything. If they're signing out of town, the overnight express has to be received. So those kind of things need to be worked out. If especially if that it's a remote closing, work that out with title on the timeline of how that's all going to work and who's going to be where, when, and
that's a really great point, Jen. We've actually run into a few issues where we didn't know that a party was out of state or out of town until the day before closing, so then we're scrambling to schedule a mobile notary and get rebalanced with the lender. And then we have to let the other side know that it's not going to fund until the next day because we have to get those originals back. So that's a really good point.
Yeah, and we're coming up on summer. So I chuckle every summer because it always happens that the contract will be made for a closing date right smack in the middle of someone's, European vacation. I mean, not as much lately because obviously COVID and stuff, but I mean, people are starting to get out more. So if you know that your buyer or your seller is traveling, my suggestion is not to make the close date in the middle of that because it is chaos, dealing with other states and especially other countries. Not all in all countries, you just got to really think that not all embassies, they have to sign in an embassy and you've got to get an appointment and you can't just walk in and say, oh, hey, I need a notary. So that's really important to talk through with the title company and the lender. The other thing I will mention for buyers, lenders are more strict now about powers of attorney. They want live, wet signatures of the buyer. They are not, unless it's an extenuating circumstance, like they're in a hospital or like the buyers have to sign in person. Powers of attorney are not that easy anymore because Fannie Mae is not, the lenders are not really accepting them as much. So there's been some changes. So make sure that if you think that your buyer might, like I said, be out of town or something, buyer or seller, you've got to check with the title company and the lender to make sure what the rules are and what they're not. So, because it's too much to memorize, right? Like it's changing all the time. And so I think the best cautionary thing is to make sure and involve title and lending really, really, really early about that. So after the signing, title sends us via scan the documents to review. And, I want everyone to realize, like, because of security and buffers and a lot of title companies now, I don't know if do y'all have a secure like portal where it's a special sign in and all that, like a secure thing? Is that what y'all do with lenders?
Yes, we do.
Yeah. So what I'm saying is it takes longer. And, I'll be honest, sometimes our servers are so sensitive, we block out those emails. So like on closing day, title's like, hey, I sent it. And then we're like, we didn't receive it. There's some back and forth. I mean, imagine all the lenders that title companies deal with. So things are possibly not going to fund within 10 minutes. It's very rare of everybody signing. So I think that realtors, and this is in Texas. If anyone's ever watching this out of the state, you just kind of check with your local state. But in Texas, yes, we fund the same day whenever possible, but there is some time that's needed for title and our closers to go back and forth about documents. And then we have to create a password to the secure portal and view everything. Yeah. And there's some extra steps that are needed to protect everybody's privacy. And that stuff doesn't happen in a few minutes. So waiting at the title company for funds and checks and everything else is kind of a thing of the past because you'll be waiting for hours. You should probably anticipate it'll take 2 hours to fund. That's at least my opinion. Laura, I don't know what you.
I agree. I always try and set that expectation when I'm in closing. I will tell buyers and sellers even, funding can take, on a good day, it can take 15 minutes or it can take 3 hours. And it really depends on how busy the closing departments are. Again, like Jen was saying, the portals, I do have a few portals that always go into my junk inbox. And then, of course, they have their firewalls that could be blocking our messages, and then funds, So it's definitely, there's a lot going on behind the scenes that people don't see. So it's always better to set the expectation that funding will most likely be a few hours.
Yeah, cool. And then just the last thing that a couple of things to ensure a smooth closing. We've mentioned some of them threaded throughout here while we were on topic, but I just want to be sure that the buyers and the sellers are responding to title emails and requests. This is the number one thing that holds everybody up, is that the seller was supposed to pay HOA something for resale certificate, or we hear commonly as the lenders that sellers not responding. I can't get title can't get a payoff or cure things if the seller's not responding. So it's important, realtors, we need you to help us coach your clients. In the first week is a lot. They're going to get a slew of email. They're going to get emails, the buyers get emails from the lender, emails from title, an email with the inspection. All these things are flooding at them. They have to pay attention or they will not close on time. It will delay, and then there's scramble, and then that causes errors, and it is just bad for everybody. So please, please, please work it into your script. Laura, I don't know if you have anything to say to that, but that's my number one thing that I encourage people. They've got to pay attention.
I agree. And that's why, I know that a lot of realtors just want to put their information on the contract, but it is really helpful for title to have at least an email address for the buyer or the seller. That way we can reach out to them directly and CC the agent. And then that way the agent can kind of jump in and help us if we're not getting responses. And it is imperative that we're getting, payoff authorizations from the sellers, or, responses to any questions, because in that first week, we are sending title requirements that are needed in order to close. So,
that's a good point. I do see a lot of contracts where the agents will leave blank the contact information, like fill out the full contact information, address, phone number, and email of the buyer and the seller. That's a good one. So the buyer, just, coach the buyers. They need to confirm wiring instructions verbally with title before they start sending a bunch of money. That's a big one. Also, make sure they have non-expired photo ID. I know I'm checking for the buyers always. That's on our task list. We've been burned before, but they've got to have a valid government issued ID the day of closing, or they will not be able to close. They will not. So if you're a listing agent, make sure that your sellers, that's on your checklist.
And that's so funny. I actually had that instant happen last week. I know Joyce is on here listening and she had to deal with it, but the seller did not have a non-expired ID. So they tried to renew online, but they couldn't. It's been too long. Yeah. So then they had to go to where was it? I think they needed like their birth certificate or something. And then they had to go back to the DMV.
Well, I think these simple things are good things for realtors to have on their kind of pre-close and post, pre-close checklist that they can review with their buyers and sellers. And then any amendments, realtors, it's really important that you've got to copy both lender and title. Do not assume lender's going to send it to title, and do not assume that title's going to send it to the lender. It does not happen. It just doesn't. So I would rather receive an amendment 2 or 3 times and work it out on my end than not receive it at all. We had a closing recently. The day before closing, we found out there was a price change. Y'all get busy, we get it, but you've got to send it to both of us. And not expect one or the other to send it to one or the other. It just does not ever happen. It doesn't.
Yeah. And on the flip side of that, when there's a concession, a realtor concession to the buyer, that's a huge deal, because maybe their loan type, they're required to bring in a certain amount of dollars. And if the concession makes the bottom line, not reach that cash to close required for the loan, we're not going to be able to use the entire concession.
Yeah. And then the last thing I'll just say before we close is, set closing times as early as possible, just to accommodate people's work schedules and closings and all that kind of stuff. That's why you want to work with someone like Laura. There's nothing worse than a title company that says, we're not going to schedule closing until we receive docs from the lender. I'm like, oh my God, shoot me now. Please don't do that. Because, that's why it's good to have this triangle of trusted people. You trust the lender, you trust the realtor, you trust the title company. Like, we all work together to get things pre-scheduled so that we're not scrambling the last day to make sure that, clients have their schedules all set and all that good stuff. So that is all that we've got here. I don't see any questions in the portal. But if there are any questions, I do want to post here. This is our, please do just take a pic really quick of our contact info. I know Laura would welcome any questions about specific title, and likewise,
Absolutely.
anything about mortgage. Feel free to contact me. And those of you that attended, we'll send this recording out, and it'll be on my YouTube channel soon. We do have one. Oh, thank you. Annie says thank you. Thank you, Annie. So Laura, thank you for getting on today. This was just I learned several things actually, and I've been in the business a long time. So thank you for all your time today.
Thank you for having me.
Yeah, and thanks everybody for attending, and we will talk to everybody soon.
Bye.
Bye-bye.